So we saw that as an opportunity to say, if we can help central banking modernize, then the Visas of the world and the ecosystem can really have a modern infrastructure to provide merchant services and better consumer services around that. So we're on the infrastructure end, and we build an API-led model. We leverage a distributed ledger technology that allowed us to make the case around trust. We made a bet on public ledger. We selected Hedera. That's one of those unique principal choices that we did as well.
Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be jumping into our CYPRX private community fundamental report that we have been dropping to you all on the X space. So if you guys want to read through them, you guys can head over to my X profile and read this yourselves. We're going to be dropping 3 of them per week. We're going to be covering the short-term volatility in the cryptocurrency market that we've seen, why we've seen a depreciation slightly of the digital asset landscape over the past 24 to 48 hours, what has been weighing on crypto prices, but then rolling over into the long-term perspective, showing you guys that the infrastructure is still being built out, that regulatory developments are unfolding at a rapid pace, and that there are positive things happening in the crypto asset ecosystem right now as we speak. So if you all enjoy these deep dives, these video breakdowns, do us a favor, smash that thumbs up button and subscribe. Now, as we go through this report, keep in mind that this is only just barely scratching the surface of all the fundamentals and the information that we give in the private CYPRX Discord. So if you guys want more access to this type of information on a daily, weekly, monthly basis, head over to CYPRXtrading.com. We would love to have you in the private Discord, tapping into this information with us as we share it every single day. So we're just going to first discuss the fundamentals, the factors that have temporarily weighed on the digital asset space. As we can see, turning on the session indicators from roughly about Tuesday, give or take, yesterday during Asia's session, the total cryptocurrency market cap has slightly retraced off of the $2 trillion threshold and has lost over $56 billion in value. Now, I am still bullish on the total cryptocurrency market cap, especially in the long term. I have a firm belief that over the course of the next consecutive months/years, we're going to see a massive turnaround in risk assets, particularly in crypto. So I am taking advantage of discounted prices when they come about. And again, not financial advice. Do your own research, investing into blue chip digital assets that I think are going to perform well, which we're going to cover in today's video breakdown. So make sure that you stick around for the entirety of this call. So let's just talk about this. This is the boring part of the call. This is more so for you mature investors that want to actually know why we've seen a slight decrease in risk appetite over the past 24 to 48 hours. For those of you all that care, and if not, then I will leave, video clips down at the bottom so you guys can skip through this and we can get through this fundamental piece, because we are going to talk about Hedera and we are going to talk about soy, and we're also going to talk about some regulatory developments in this report. So during the Asia trading session, market sentiment turned slightly negative as the yen strengthened following hawkish remarks from the Bank of Japan officials. The total cryptocurrency market cap dropped by about 56 billion as investors shied away from aggressive bullish positions amid concerns over the yen carry trade unwinding further. I won't jump too much into detail and bore you guys to death, but on Wednesday, give or take yesterday during Asia session, it was Wednesday Asia session, Bank of Japan, policymaker, I'm not going to butcher this lady's name, I'm just going to call her JN, indicated that the central bank is prepared to continue raising interest rates if inflation aligns with its forecast, suggesting that last month's market volatility has not derailed its plan for gradual rate hikes, and highlighted the need to consider the broader economic impacts of market environments when deciding on future rate adjustments. Now, we know that comments like this can temporarily weigh on risk assets like cryptocurrencies because they create demand for the yen, which is a safe haven asset, and increase market uncertainty, which leads to shift in investors' behavior. As seen with the recent decline that we got back in the crypto market, especially from July 31st, I believe it was, if I'm not mistaken, when the Bank of Japan hiked rates and the yen carry trade unwinding took place. We saw back on July 31st, when the Bank of Japan hiked rates as we rolled over into August, a massive drop in the valuation of not only cryptocurrency assets, but global stocks across the board, i.e. risk assets, as the yen carry trade unwound. And I've mentioned this in previous video breakdowns, the risk of this possibly unfolding further is still on the table. And so this possibility increased slightly with yesterday's hawkish comments from the Bank of Japan, which weighed on risk assets yesterday during Asia's session. As you guys can see, here is a tiny little screenshot. Let's just pull this up real quick. We can see the hawkish comments during yesterday's Asia session weighing on risk assets like crypto. Moving on in today's New York session. So today we had the release of the US CPI, which delivered a set of mixed inflation data, casting doubt on the market's previous hopes for a 50 basis point rate cut. If you all remember, just a few weeks ago on August 23rd, risk assets were rallying optimistically after Jerome Powell hinted at the potential rate cuts during the Jacksonville Symposium on a Friday on the 23rd of August. Here you guys can see that screenshot. You can see Fed Chair Jerome Powell indicates interest rate cuts, and this was on that Friday. We can see a nice little bullish rally in the digital asset space where we tapped into roughly about 2.2 to 2.3 trillion. And then right after that, the market started to pull back as investors saw that they got ahead of themselves, expecting a 50 basis point rate cut from the Fed in September, which has now slightly dwindled off the table. However, the latest inflationary figures suggest that the Federal Reserve may now cut rates at a slower pace, with only 25 basis point cuts on the table or even the potential hold for another month. The expectation of higher interest rates for a prolonged period of time has strengthened the dollar today as investors anticipate more attractive yields. The dollar surged to a high today of roughly around the 101.8. That was as of time of writing. I believe it went slightly higher, while the cryptocurrency market cap shed over $56 billion in value. So we have some central bank sentiment changing hands. We have some rate hike possibilities from the Bank of Japan, which we know tend to increase the strength of the yen, weighing on risk assets as the yen carry trade, or the fear of the yen carry trade unwinding further, obviously, of course, increases. And then that pushback of interest rate cuts from the Federal Reserve. We went from a 50 basis point rate cut optimism that slightly dwindled now to a 25 basis point rate cut. So those factors combined have temporarily, again, I say temporarily because I am bullish long-term, weighed on the digital asset landscape. And if these developments continue to unwind further, we could see further price depreciation, which is why we let our community know in the now what has weighed on risk assets and what we need to be paying attention to moving forward, which we cover in our private community Zoom calls. Moving on, let's move over into the optimistic part of our fundamental report. We have some upcoming Web3 events. These are all the Web3 events, the crypto-related, blockchain-related events that all these large financial institutions are attending that the mainstream will never tell you is happening or going on behind the scenes. We have, first off, the future of Bitcoin, the Bitcoin Amsterdam conference, which is going to be from the 9th to the 10th of October. I'm just going to go through these quick. We have Meridian 2024 hosted by the Stellar organization. You guys can see that is going to be from October 15th to the 17th. Scrolling down here, we have the Digital Money event coming in October as well. That's hosted by the Digital Pound Foundation. You can see some very interesting industry leader representatives here, such as Ripple, Accenture, Visa, Deloitte, HSBC, MasterCard, JP Morgan, Deutsche Bank, IDEMIA, all attending this event. So that's going to be one not to miss. Scrolling down here, we have the 4th edition of the Mansion House Summit 2024. That's going to be a big event as well. We have the CV Summit. We have GBBC Blockchain Central UNGA Summit as well. That's happening at the end of September, I believe, on the 23rd. Yep, right here. Let's see what else we have. We have Payments Innovation and Technology Week. Look at this massive list of participating organizations. We have lots of central banks, lots of large organizations. This is happening as well at the end of September. I mean, and I can't stress enough, look at what they're going to be talking about. It's literally called the Digital Currency Conference, okay? You can assume that they're going to be talking about stablecoins, CBDCs, crypto assets, right? Tokenization, so on and so forth. And you can see the biggest organizations in the world attending this event. Then last but not least, we have the FPC, the Faster Payments Council fall meeting. That's taking place as well towards the end of this month. And we can see, again, large organizations, for example, ACI Worldwide, whom we know is a Ripple partner, MasterCard, Euronet, who else do we have? BNY Mellon, right? So largest organizations in the world. And then last but not least, we have the Institute of International Finance hosting an event, an annual membership meeting, right? And we have Janet Yellen speaking there, and they're specifically going to be talking about digital assets and the digital infrastructure, right? You can see right here, it says right here, they have digital and sustainable topics on the forefront, okay? So moving on, those were just some key fundamentals and summits and blockchain events that are set to come out over the next consecutive couple of weeks/months that yet again the mainstream never really covers. So we thought that we'd throw them in the report in case anybody was interested in attending or just paying attention to any video clips or fundamentals that develop from those meetings and those summits. Let's move on to some of the legal developments right here that we have in the report. Just giving you a little tiny taste of some things that have happened over the past consecutive couple of weeks. Illinois passed and enacted the Uniform Commercial Code 2022 amendments, making it the 25th state to do so. As you can see here, this report came out on the 20th of August, where they go on to say and talk about all the different states that have updated this code periodically. You guys can see which ones have passed, which ones are in progress. This is obviously, of course, extremely positive for the digital asset space as the regulatory environment continues to unfold. It says the UCC amendments are intended to deal with the emerging technology and provide more certainty in law around transfers and financing of digital assets. So this is yet again another positive development, which is why I'm so bullish long term. Then we also had on September 9, just a couple days ago, the Treaty on AI, where the UK and the US signed the first global binding treaty on AI safeguards, which is monumental. The world's first legally binding international treaty on artificial intelligence safeguards was signed on September 5th, 2024 by key global powers, including the EU, the UK, the US, and several other nations, known as the Framework Convention on Artificial Intelligence, Human Rights, Democracy, and the Rule of Law. This treaty was introduced by the Council of Europe, and it aims to ensure that the development and use of AI systems are consistent with human rights, democracy, and the rule of law. So this is extremely significant because it creates a global framework for converging the entire life cycle of AI systems, which we know AI and blockchain will coexist in the future together. So we need to see artificial intelligence regulations on top of digital asset regulations unfold, which I've just shown you they are, which is again why I'm extremely optimistic long-term in this digital asset landscape, right? Now, moving on, we have some interesting podcasts, particularly in this specific conversation that's set to drop. We have the founder and CEO of the Digital Chamber. I'm not too entirely sure her name off the top of my head. Let me find that for you guys real fast. Perrine Boring, hopefully I'm pronouncing her name correctly, but it's always so lovely to hear positive individuals in this space speak. And so what they're going to be talking about in this specific podcast, which by the way, in our report, you guys have the link to this. They talked about the state of crypto regulation, investor landscape, regulatory issues in Web3 and artificial intelligence. As I mentioned, those two will coexist. And then legal advice for founders and individuals invested into this space. So it is a extremely good and optimistic podcast. If you guys want to tap in and listen to this, again, the link for this entire fundamental review is on my X page. You guys can go check that out. Now let's roll into some Hedera developments and some Soy network developments. These are massive in my personal opinion and just goes to show that the Soy network and Hedera and their ecosystems that they're building are some of the leading organizations building out the infrastructure for financial institutions to come on board. So on September 18th, this is in the next consecutive couple of days, because as of time of recording, it is the 11th. The Global Blockchain Business Council will host the third episode of its educational virtual series. Not all blockchains are the same. The sponsored event by Accenture, the Algorand Foundation, and Digital Assets, this series is aimed at providing regulators, government agencies, and international standard organizations with a deeper understanding of different blockchain technologies. On episode 3, the focus will be on Hedera, a decentralized network known for its responsible governance model. Hedera's key feature is the separation of governance from consensus, ensuring no single entity, whether a company, developer, or group or node operator, can exert undue control over the network. And you guys can see here is the link for that if you guys want to tap into that. Again, you're more than welcome to. We thought that we'd share that because that, in my personal opinion, is an important development. Now, let's talk about the fact that Accenture's mentioned this because recent announcements, in my personal opinion, connect Hedera and Accenture together. So recently, Accenture announced a significant investment in EMTech, a fintech company that offers SaaS platforms to assist central banks in modernizing their operations, including areas like digital cash, regulatory sandboxes, and compliance. This investment allows Accenture to integrate EMTech's offering into its core banking transformation services, helping central banks navigate the emerging era of tokenization and central bank digital currencies. So if we scroll right down here, we can see this fundamental report from the Digital Pound Foundation, where Accenture invests in fintech firm EMTech to support central bank modernization. Now, we know that EMTech is partnered up with Hedera.
And the value of central bank money is really the fact that the central banks play a key role in the overall financial market. So the opportunity that MTech saw is, can we actually tap into the efficiencies, the benefits of modern technology if we were to bring that at the central banking layer, but really understanding the role of a central bank as an infrastructure provider, not particularly a service provider. And then you really look to the Visas of the world and the ecosystem players to say, what if you had a better infrastructure, right, for money to really move around, for you to get more visibility, for you to have regulatory frameworks and risk mitigation frameworks that really allow cross-border payments to be what they can be, lowering the cost of payments. So the really simple decision was to say, focusing on modernizing central banking infrastructure. And on one side, we look at the regulatory aspect of it, because come to find out, when we talked about CBDC, regulation comes right after when it comes to adoption and implementation. So we saw that as an opportunity to say, if we can help central banking modernize, then the Visas of the world and the ecosystem can really have a modern infrastructure to provide merchant services and better consumer services around that. So we're on the infrastructure end, and we build an API-led model. We leverage a distributed ledger technology that allowed us to make the case around trust. We made a bet on public ledger. We selected Hedera. That's one of those unique principal choices that we did as well.
So why is this important? This partnership is a major development in the modernization of the central banking infrastructure, enabling central banks to adopt cutting-edge technology to streamline operations. EMTech's platform focuses on creating decentralized, scalable, and transparent systems that facilitate financial inclusion, particularly in targeting the 2 billion people globally who remain unbanked. By using modern blockchain technology, EMTech aims to converge barriers to access, ensuring that financial services are affordable, secure, and transparent, even in areas with outdated financial systems. Now, here is the connection to Hedera. EMTech has been leveraging the Hedera network to enhance its platform's capabilities. Hedera's extremely low transaction costs, strong security, and transparency make it ideal for reaching underserved populations by reducing costs and ensuring trust in financial services. Hedera's partnership with EMTech includes using its Hedera token service and Hedera's consensus service to create efficient, secure, and transparent financial solutions. So, yet again, this partnership ties back to Hedera's mission to provide decentralized and secure solutions for financial services. So, again, in my personal opinion, this is massive. These are massive developments, and this is all just recently announced. You can see Accenture invests in EMTech to strengthen CBDC September 10th. And we know if you head over to the Hedera website, we see right here EMTech, who is it built on? It's built on Hedera. So this is massive. Accenture is one of the largest organizations in the digital asset landscape, as you all just saw, right? And they are a massive industry-leading participant. And they just partnered with EMTech, whom we know is built on Hedera. I cannot stress enough, that is massive news. It's not going to create any type of bullish momentum right now. But again, zooming out long term, we can see that the infrastructure is being built, which is why in this report, I try to get you guys to see what's creating some short-term volatility, i.e. that downside sell pressure over the last 24 to 48 hours. So that way you guys aren't manipulated into thinking that just because these bullish, fundamentals are developing and unfolding now, that we're going to see a dollar price prediction on HBAR. Because that's not a reality, and that's not what we portray here at CYPRX, always trying to give you guys the realest information, showing you all that short-term pullback, short-term sell pressure, long-term infrastructure is being built, regulatory landscape is coming into fruition, developments are for a fact happening, right? Smash that thumbs up button and subscribe as we roll over into the Soy network development. So this is massive as well. Recent developments around Soy and Agora showcase the growth of the blockchain and decentralized finance sectors. Back in May, this is a couple months ago, Agora announced the launch of its AUSD stablecoin on the Soy blockchain following its release on Ethereum and other platforms. AUSD aims to provide financial stability by being pegged to the US dollar, making it more accessible to underserved communities. Here is that fundamental report that you guys can click on and you can see the date. Now, fast forward to September. As of September 5th, the AUSD is live on Soy, bringing liquidity and enhanced DeFi ecosystems, which already boast over 600 million in TVL locked. The integration on the Soy network improves market efficiency and strengthens the stablecoin utility. And here is that fundamental piece. So we're seeing them announce things, and then we're seeing the developments unfold. And the reason why I showed you guys this is so that way you can see that these developments are happening, but they take time. Where they announced that they were going to release a stablecoin back in May, that stablecoin is now released in September. And so we have to be patient and we have to wait for these things to unfold. Now, Soy, we know, if you guys have been following us here at CYPRX, has been making waves with strategic partnerships, notably with Google Cloud, FordFi, and Copper. Through a partnership with Miston Labs, Soy is leveraging Google Cloud's AI infrastructure to improve Web3 security, scalability, and user experience. Here is that fundamental report if you guys want to tap into that. Now, FordFi brings institutional grade security for users to manage their digital assets across blockchain, and Copper enhances Soy's institutional financial appeal by providing enterprise-level custodial services. And Soy is partnered with both FordFi and Copper, and you guys can read about those in these reports here. Also, an innovative step that Soy is developing is addressing the challenge of offline crypto transactions, which we know large financial institutions are definitely focused on. Through radio wave and mobile networks, Soy is enabling internet-less crypto transactions, solving a critical issue for unbanked communities in regions with unreliable internet access. Keep in mind, again, what is Accenture up here attempting to do with EMTech, right? So you can see that this is the goal of these large financial institutions, is to build out the infrastructure, offline payments, and to bring users on board and make this space so much more easy and usable. Now, last but not least, we added this extra research piece where in this report, it uncovers some fascinating insights into what Australians believe about crypto and how they perceive it as an investment and what their future actions might be. It is the Consumer Research Report for Australia. We thought that we'd throw that one in there as well. And you can see here, this is from August 2024. And let's just read through some of the key findings before we end this call. Always keeping you guys on a positive, forward-looking outlook for the future, but reminding you all that in the short term, we could still be dealing with some downside price volatility swings that we need to be adjustable with and be able to manage, again, and stomach that volatility, not get shaken out. While skepticism and some reservations remain after a few years of bumpy news headlines such as the crypto winter, some exit scams from the last bear market, and a number of high-profile crypto exchange collapses, Australians are adopting crypto with an increasing enthusiasm and confidence. The survey revealed some of the highest adoption figures yet, and globally, with 1 in 5 Australian adults either currently or previously owning crypto compared to the estimate global crypto adoption rate of just 6.8%. This puts Australia firmly in the early adopter category of the crypto adoption continuum. So I thought that I would just throw that in there just to show you guys that we are still seeing bullish fundamentals and things happening behind the scenes. Hopefully you guys enjoyed this video breakdown. Never giving you guys any bullish moonboy hopium. Always spitting facts to you all by understanding what's creating price volatility in the short term, why we're seeing digital assets pull back slightly, going from roughly about 2.3 trillion at the beginning of August down to where we currently sit now at about 1.9 trillion, what factors are temporarily weighing on the digital asset landscape. But then at the same time, showing you guys that there are still positive developments happening behind the scenes to keep you forward looking. Do me a favor, smash that thumbs up button and subscribe. And remember, this is just scratching the surface of all the information that we give inside the private CYPRX Discord. If you guys are tired of all those communities that are constantly leading you in the wrong direction and giving you just hopium, dopamine fixed information that's always just steering your attention in the wrong direction, then head over to CYPRXtrading.com where we're always constantly providing value and good research. Join the Discord and tap into our private community. As always, many blessings to you guys. None of this is financial advice. With that being said, I will see you guys in the next video breakdown.